The first report that I want to talk about in this series is an assessment of the microfinance sector in Myanmar that was published about 2.5 years ago. It was produced by the International Financial Corporation, which is a member of the World Bank Group, and CGAP, which is an independent policy and research center dedicated to advancing financial access to the world's poor that is also housed at the World Bank. You can, of course, access a complete copy of this report on our website at i1P2P.com. The main takeaway for me from this report is the massive imbalance that exists between supply and demand in the credit market in Myanmar. This report cites estimates of nearly $1 billion in microcredit demand, but only $283 million in supply. This means that there's unmet demand of over $700 million. A lot of regulatory advances have been made in the past 3 years since this report was published that have made it easier for international investors to enter the market. But the unmet demand has, if anything, increased to over $1 billion. So why is there such an imbalance? Are the interest rates too low to attract lenders? No, in fact, the interest rates are quite high by Western standards. The legal lending rate for microfinance institutes are up to 30% APR. The range that I've been quoted by local borrowers that I've spoken to is between 5 and 6% per month, which is 60 to 70% APR. This report even cites the higher rates of up to 20% per month, or well over 200% APR, which I've also heard from people locally that I've spoken to in cases where people have had to go to the local money lenders, who are also the pawn shop and gold dealer types. So why isn't anyone capitalizing on this market? Short answer, a lot of people are trying. The biggest single player in the space is the Myanmar Agriculture Development Bank, who at the time of this report were reaching 1.4 million rural customers. There's also cooperatives that have over 470,000 combined members, as well as international and national non-government organizations working in the microfinance space. The largest is UNDP's PACT, with over 360,000 borrowers. There's also 60 specialized agriculture development companies that support over 200,000 farmers with loans each year. So there are a lot of players in the space. The issue is their scale relative to the demand. Like I mentioned earlier, all of the current players combined are providing $283 million in microcredit each year, which is huge, but it's still less than 30% of demand. So why aren't they scaling up? Well, the current providers fall into 6 categories that each have their own challenges, but basically boil down to the cost of reaching more customers. Like I said, MADB is the largest player, but as a government-subsidized bank, their growth is limited by the government's ability to subsidize more loans. Private banks, on the other hand, which aren't subsidized, simply can't make money in the space because their lending rates are limited to 13% APR, and their overheads, well, they're similar to those of PACT, which reports operating expenses of 15 to 18% of overall portfolio. NGOs are also subsidized in that they rely on donor funds to operate and scale up their operations, which again limits their growth. Cooperatives rely on the deposits of their members for growth, and the ag companies mainly use their own capital, although they do receive money from international lenders such as Kiva. The problem, as this report points out, is there isn't a precedent in Myanmar for limited liability companies that are structured specifically to be MFIs. Every player in the market is something else and an MFI. There are ag companies that also do microloans. There are commercial banks that also give microcredit. There are political organizations that also give microloans. There are NGOs that also run microfinance programs. And together, they're failing to meet 70% of the market's demand. So is our goal to raise the capital needed to meet the other 70% of demand? Am I trying to build a $700 million fund and then distribute it to 5 or 6 million people spread across the country the size of Texas? No. What I'm planning to do is connect anyone in the U.S. that would like to capitalize on this unmet demand directly with people in Myanmar that would like to get a loan via a peer-to-peer lending platform. We're not trying to collect and redistribute the money needed. We're providing a platform where many people can connect directly with many people and together make money.